I love this. I mean, it's not like, I make the most money teaching or anything. I do make a good amount of money. I can't tell any lie about that. But, it's just the fact that, you guys are understanding and you guys are using the things that I talk about that no one else talks about, right? To your advantage. Some of you are making money with your live accounts. Some of you're already, passing funded accounts and stuff like that, which is nothing, right? Because it's literally just March, bro. We haven't really spoken about, the hard topics as yet. This is all foundation. And I believe that, there is somewhat perfection, right? Everyone says that there is no perfection in trading, that's just them. I believe that there, somewhere there is perfection, right? Which I am aiming for. That currently, the topics that we've talked about, the concepts that we already use, it's probably yielding you over 85% accuracy. And if, there is a time when you fail or, you make a mistake, that's on you because you just didn't do what I told you to do. Right? So, you remember the past Sunday when we did our analysis, right? I told you guys that Tuesday and Thursday would be the days that we, would be taking action, right? This is either Tuesday or Thursday will have the low or the higher week forming, right? And we had the high of the week, right, forming on Thursday for most asset classes, and the low of the week forming on Thursday for most asset classes. CPI did give us a good move, right? But the best move was Thursday. So the one shot, one kill, right? That model that we will be discussing very, very soon in detail. It's not like, what ICT gave us that's just very ambiguous, probably 50-40% accuracy if you actually follow that, right? And very difficult to, find in your charts. It will not be difficult for you at all. You will know when it's there and you will trust it based on all of the activities that we have been going through already, all of the things that, you've seen literally pan out beforehand, right? So as you guys can see, you guys can see that there are, look at the screen right now, there are 5, right, red folders on Thursday. There's 4 on Tuesday. There's 2 on Friday, and there is 1 on Wednesday. By just using the information that you have right now, you don't need to know what they mean, right? You don't need to know what is PPI, what's retail sales, what's unemployment claims. Doesn't matter, right? The number of, red folders that are on each day usually, represent the importance that those days will have, obviously, in relation to price action. So as you guys can see this week, right? This is not high sign to talk about this Sunday. The past Sunday, right? Thursday, we had that move that shifted the market, right? On Thursday, which occurred after sequential SMT, right? Tuesday, we had CPI, which gave the market a, proper pump up into premium, which is where we saw a reversal on Thursday. On Friday, we saw a continuation of Thursday. Wednesday, we didn't see that much, right? So that alone in itself is a gem, right? That alone in itself is a gem. Take that into consideration. Like what I just told you just now. Anything that I tell you is of importance. I'm not gonna come here and be like, look at this special pedia rate, because pedia rates don't make sense. Like, in my opinion, right? You've been using order blocks and breakers for how long now? Where have they gotten you? Have you seen any consistency? Have you seen any have you been improving? No. When you learn about volume imbalance, do they help you? No. Be honest with yourself, they don't. They do not. Right? They're illusions. Price does one of two things, right? It fills imbalances and it seeks liquidity, which is above old highs and old lows and below old lows, right? So right now you're going to learn this, right? Which is, in my opinion, important, when you have no higher time frame periods to use. And it can be used in different ways, which we will discuss in the future. Not now, right? So looking at my screen, you can see to the left, we have the S&P 500 index. And to the right, we have the E-mini S&P 500 futures. Already, you're probably like, what's happening? Never seen this before. Who does this? I've thought about this before, and I've seen it in the charts before, but I never knew that we could use this. I never knew that we could use this. Hold on, yes, that before this year, you could not use this because you did not know what sequential SMT is. You couldn't use this, right? But now you can because you have sequential SMT, which is the basic mechanics behind market reversals. That's what sequential SMT is. Mind's blown already. I know, right? So whenever you see something like this happens, right, you see, the index, a cracking correlation between the index and the futures contract of, right, the said asset that you're looking at, right? So if you're looking at the S&P, you want to see a cracking correlation between the index and the futures contract, right? Which is why I said that I wanted to see price run above Wednesday's high. I did not say this one because it was this index. The index was already above the all-time high, so I knew that it was like, which is why I was, basically telling you guys that I am basically one-sided. I'm like trying to tell you guys that I expect it to go down, right? Listen, sequential SMT is not a joke. When you could be, taking your time and, you're very worried about, should I trade this? Does it make sense that I trade this order block? First of all, no, it doesn't make sense, right? It works sometimes. Why? Why does it work sometimes? Because there is a imbalance attached to that order block. That's the only reason why it works sometimes. Why do breakers work sometimes? Because there's usually a imbalance attached to that breaker. Right? The market is referring to the imbalance. It doesn't give a shit about the breaker. It doesn't care about the order block. You understand? What you've learned in regards to that candlestick patterns, right? It's just an illusion, man. To make this thing like seem harder. It shouldn't be that hard. And it's not. Right? So here you can see a cracking correlation, right? You can see the index for the S&P taking the previous quarter's high, right? And you can see the futures contract failing to take that high. Just trace the rejection block. Right? So in this case, right, there is, right, if you see something that is even happening, and make sure it has to be sequential SMT, and of course, you need to see a lower time frame sequential SMT to, confirm this. Price will usually, react to the wick or basically the rejection block, which is the opening of this candle right here, which it did, right? And remember, this is not hindsight, right? I am never you're never gonna see me talk about hindsight. I have to like talk about it beforehand, and it has to pan out, right? And then I will choose to speak about something. I will not just, just pick a random movement of price. And I've been doing this for almost 3 months now. And do you know what's even crazier? The market is like garbage right now. So there are going to be times when you're going to be trading, or you're going to be, tape reading, and it will be like for like 2 weeks, 3 weeks. I can't be wrong. Oh my gosh. Yeah, that's what it's going to be like. You're just going to be trading for like, and then you have like 5 winning trades. And the only time you lose is when you make an error yourself. It's not because of the concept. It's because of you. Because this is as close as you get to perfection. And you guys see it working with your own eyes. You're using them. And it's working. Sometimes you're like, wow, every time price turns, it's there. I'm not lying to you. I don't have to like be here just lying. You're not like, that you're not being scammed. Right? It's just March 2. Right? You haven't like learned, the real, thing yet. There is no hindsight here. Right? And again, this is as close that you will ever get to perfection. But you'll probably get there this year. So yes, so as I said, this right here is equal to S&T between the index and the futures. So if you're using Forex, what will you look for, right? What will you look for? You will look for sequential SMT between the futures for the Forex market, the particular Forex market that you're looking at. So for example, for the Euro, you'd use that futures contract, and then you'd use a broker's, right? The information, or what do you call it? The data from a broker for the Forex player. The same thing goes for Bitcoin, right? You can use Bitcoin's futures contract, and you can use, like, for example, Kraken or Coinbase's data for Bitcoin, and then you could find things like this as well. So here you can see for the E-mini S&P futures, right? Remember when price was literally, where was it, here or here? We expected price to trade above this high and then fall, which did happen. Isn't that amazing to you? Like, to be honest, if I was new and someone did this, I would go crazy. While teaching me how to do it at the same time, then I'm catching the same move at the same time, over and over again, week after week. Because obviously, we won't have this accuracy every single day, but maybe there is. Right? So here, you guys can see on Thursday, Q4, we ran Wednesday's high. Q3, due to the fact that we had SMT, right, during the futures on the index's data, right, we could expect price to reach into this rejection block and not break above this high, right? Also, we had confirmation here with the lower time frame cycle sequential SMT. So it was just a no-brainer, to be honest, right? Here, the NASDAQ, we can see that price traded into this fair value gap, right? Not above this high, but into this fair value gap. And here is where we had our sequential SMT form in regards to the NASDAQ, right? I said something on Twitter today, which will go over thousands of people's heads, right? They won't understand because they don't know what you know. So here, you guys can see that there was no imbalance here. right? Now turn the crosshairs on so you guys can see. So on this candle right here, you guys can see that there was no imbalance, right, within the S&P 500 futures price action. Here, you can see that there was an imbalance. And I said that price does one or two things. It fills imbalances or it runs liquidity. So this is basically what you would usually expect to happen whenever there's SMT, right? You have price run the liquidity here on Wednesday. Then you have price fill this imbalance right here, right? Makes sense. So due to the fact that there was no imbalance here, there was just this liquidity pool, and due to the fact that there was an imbalance here, we did not expect price to go above this high, right? Because there are two data points the price wants to react to: an imbalance and a swing high. A cracking correlation occurs when you have price trading above a swing high in one asset class while filling an imbalance in the other, right? And remember what I said about breakaway gaps, right? Breakaway gaps occur whenever price trades above the 50% of a fair value gap, right? So you have price break down, and you're not going to expect price to come back into this gap. Whereas we have price fill back this gap right here. So whenever you have price run above a high, right? This is what causes sequential SMT. Then it breaks down due to the fact that you already know that the other asset classes, right, or asset class, which in this case would be the Nasdaq, already filled their gap. You already know that this would be an entry for you within this specific asset class. But here you would expect price to not fill this gap. Does it make sense? Also, as you guys can remember, we talked about, expecting the Magneto effect, right? So basically, what usually happens in the Magneto effect is you have sequential SMT here, which we did have, which we spoke about, right? And then price trades above the previous sequential SMT, which was here, which was caused between this high and this high. Do you remember? Or this high and this high, right? So price trades above this high, which is the high of the previous quarter right here, which was Q1 of the current monthly cycle. Trades above it, then what happens? What do we always look for? We look for a lower time frame sequential SMT. Do you remember? So these are rule-based methods, right? This doesn't change. You need this. If we didn't have sequential SMT here, we wouldn't see price fall. When price trade, the only time, right, when I really came and I'm like, listen, this is going to happen. When did I come? When price broke above this high and there was sequential SMT. And what did I say? I want to see price trade above this high first, and then I want to see. I don't want to see the Nasdaq trade above this one, and then you can go in. And then what happened when price trade above this one again? We had a lower time frame sequential SMT again. So we have three chains of sequential SMT. We had one on the weekly, within the weekly cycle, right? We had one above that, the monthly cycle. And then we had one where? On the daily cycle. This is as close as you'll get to perfection, and we'll discuss this more next week, right? Listen, this is the best time. This is the time when you will see reversals, go in your favor. Like, this is the time when it's like almost impossible to lose. This is like the time when it's perfect, right? These setups do not happen a lot, but they happen a couple times per month. right? So we had a higher time frame sequential SMT, the monthly cycle, right? Which was bearish. Then we had a lower time frame sequential SMT on the weekly cycle between Wednesday and Thursday. What is Thursday? Remember, what's Thursday? What's Q4 known for? Reversals. Q4 reversal. Remember, Q4, in my opinion, I really like Q4, more than anything else, right? So here we had price went above this high, which is Wednesday's high. Then what happened afterwards? We had right here on this candle. This candle represents the morning session, right? And this candle was the high of the London session. So here, I don't know if I have to zoom in. You guys can see price runs above the London session high during New York, while we already had a daily sequential SMT, and we had a monthly sequential SMT, a weekly sequential SMT, and then now we had a daily cycle sequential SMT. In the Nasdaq, we did not see price run above London's high during New York. That's bearish, right? Then we had this again where we saw price run above both the London session and Wednesday's open at the same time. So this right here is very important, right? If you see price below both the daily cycle and the weekly cycle's high, while being above the monthly cycle's high, which is what in turn causes the sequential SMT between the futures contracts, right? This will be very explosive, right? And you guys can see that we had very, clean price action within the S&P 500 is just falling returns and just falls. Way cleaner than the NASDAQ. Why was that? Because of this. It's because of this. Remember, nothing in price is random. Everything in price makes sense. Everything in price makes sense, right? Every single thing in price makes sense. Even right here, look, when price traded within this fair value gap, right? You guys can see on this candle, look at the crosshair, right? Can you see that? This is a up close candle for the SPX 500 index, and for the S&P 500 futures, it's a down close candle. Do you see that? SMT occurred here, where we saw, right? SMT occurred right here at these lows. So we saw the futures contract trade below this candle's low, right here. And we saw the ES's Hwanda's data, whatever it is, same thing for any data that's not the futures data, right? Fails to trade below this low. This is SMT, right? This is SMT. That is SMT. Might seem a bit exaggerated within the futures contract, but that is SMT. That's what SMT is. So when price traded above this high, right, and trade back here, you could buy here. It would be very good to buy here as well, right? But remember, we had lower time frame sequence SMT here as well within the futures contracts. So using, right, the data, right, on the platforms that support the index markets, you will get extra confirmation. And with that being said, you've learned gold tonight, and we will, go deeper into this information next week. So I hope that you guys have a wonderful time this weekend studying this, seeing it work over and over again. And remember, nothing in price is random. Have a wonderful weekend.